Money Matters is sponsored by Strategic Wealth Designers.
Well, it is no secret things are getting more expensive. So how do you keep your portfolio growing right now when your money doesn't go as far? That's a very good question. Our Nick McGill sits down with Mike Reeves of Strategic Wealth Designers. Here's what they're saying.
Mike, we've been hearing a lot about that I word. When it comes to investing during inflation, what should people be considering here?
Well, what's going on right now is there are many economies that are reopening at the same time. During COVID, obviously things slowed and there wasn't enough inventories built. And right now you've got a lot of demand at the same time. And obviously you've got a lot of stimulus money out there looking for products and services. So prices are going up relatively quickly. And when you're building a portfolio, if you really want it diversified, you want to have some asset classes, or you want to invest in a way that'll help protect that portfolio against inflation.
All right, let's keep going with that then. What industries then should investors be turning to when looking to combat inflation?
So with inflation, generally the things that go up in value are hard assets, or things that if you drop them and they hit your foot, you would say, ow. You know, those are materials, agriculture, some forms of energy, precious metals. Those things tend to do well during an inflationary time. And you should own some of those all the time if you want a diversified portfolio. On the other side, you want to be careful with traditional bonds. Bonds, when interest rates go up, they tend to lose money. There's some alternative to bonds out there. If you're uncomfortable picking these investments, turn to a professional.
What about people who are already retired? We know they have to keep an eye on this as well. How can they plan for inflation and whatever's unexpected?
Well, the best way to plan for inflation is using a financial plan that includes a factor for inflation. For an example, you've got your expenses and they're going up at 3% a year, and you're seeing those dollars increase in that financial plan. Some mistakes that folks make, one would be when they're trying to build their own financial plan, they're not putting in a factor. They have their costs staying the same, and that would be a big problem 20 or 30 years from now. So use a financial plan that uses a factor for inflation so you can have more accurate numbers. If you're uncomfortable doing that, reach out to a financial professional.
Yeah, definitely lots to think about, and we know we haven't heard the last of this. Thanks for dropping by, Mike.
And for more tips on smart investing and saving, just visit the Strategic Wealth tab on the front page of fox59.com.